Hello fellow traders, how are you doing? I hope you had another great week with us, with plenty of huge gains and small losses. Gibson here from MrMTrades. Welcome to the next video. Today we are discussing the question, what kind of trader are you? And if you'd like to find out even more after watching this video, join our community. The links for our Telegram group are below. There comes a particular moment in your trading career when you have to decide what kind of trader are you. Or maybe you've even already decided about it before you started trading. The problem with this kind of approach is that it's really hard to know what trading style will fit us before we start doing it for real. All of those styles come with their own benefits and drawbacks. So to avoid any unnecessary disappointment, I encourage you to check it for yourself. So to keep things simple, when we look at it from the perspective of time, we can divide those traders to short-term traders and long-term traders. While someone who is a short-term trader can trade in a span of time between hours, days, maybe up to a week or two, long-term trader, on the other hand, can keep their positions open for weeks, months, or even years. Now, when we look at things from the perspective of technique, I differentiate two main styles of trading, fundamental and technical. And being a fundamental trader can be somewhat tricky, at least for me, as you have to formulate your opinions and subsequently trading decisions on market sentiment, socio-economic trends, news and speculations about the company. On the contrary, the technical trader is a trader that roots their decisions on technical market data, price movements, indicators, statistics, and so on. And we mainly do that in our group. And although we may be using various strategies for entries, exits, and trade management, the origin of our trade comes from analyzing the charts, structures, and patterns. And now we are coming down to the most minute details. At this point, it doesn't matter if you are making your decisions on the fundamental or technical market analysis. What's important here is for you to find out what suits you best in the sense of trading scope, approach, and psychology. Thinking about that, we can distinguish 5 main types of trading for technical traders. And we are generally categorizing them based on how long do the trades last. So the first one is scalping. Now, you can consider yourself being a scalper when you are looking into trades and taking them very quickly. I'm talking from seconds to minutes. You base your decisions on the smallest price movements, taking very small profits repeatedly. Traders who trade this way can place anywhere from 10 to hundreds of trades per day. This takes some skill and practice, of course, and I wouldn't recommend it as a beginner strategy. The next one is day trading. Day traders are taking opportunities and trading during the daily sessions, depending on the sessions and markets you're most comfortable with. This kind of trades last between minutes and hours, so the trades are usually opened and closed within the same trading day. Rarely do day traders keep their positions overnight, but it of course can happen. That's why day traders usually prefer more liquid instruments like stocks, forex, and futures. The upside is that these assets allow them to quickly get in and out of trades. On the other hand, it requires a solid understanding of the market moves and a good risk management strategy. Momentum trading. This is a style of trading that utilizes finding buying opportunities in a short-term trends, usually taking into account both price and volume information, so basically taking advantage of market volatility. And as you have already noticed, our trades are largely dependent on this strategy. The trades can last from minutes to days, depending on the price movements, and the investors trading in this way are usually trying to find a stock that is breaking out, and they try to catch that big move. With swing trading, we are taking trades that can last from a couple of days up to several months. The traders focus strongly on technical analysis to determine entry, stop loss, and exit points. So, as you can imagine, swing trading is much slower than the previously mentioned styles of trading. And I think that this kind of trading can get you closer in your understanding of the market movements, and it can be a great way to start learning the technical analysis. As the price seems to move slower on the higher time frames, The gains can be smaller than with other styles of trading, but they add up over time. Of course, as with any style of trading, swing trading carries plenty of risks as well. One of them being a so-called gap risk, where a security's price rises or falls significantly based on news or events that occur while the market is closed, overnight or during weekends. So, as with every trade, you have to be aware of the risk involved. The last type of trading I wanted to mention is position trading. The trades here can last for weeks or months. Position traders try to forecast the length and direction of the trend for much longer than a momentum or swing trade. So long-term traders don't have to worry about short-term price fluctuations, as they are looking at the markets from a much bigger perspective. And that's it. Now, based on your expectations, a lifestyle or job that can limit your time spent at the charts, these different approaches to trading can give you the flexibility that you need in order to succeed in the markets. So in order to be able to choose the style of trading for you, you have to ask yourself these questions. How much time do I have to spend daily on looking at the charts, choosing positions, testing and trading? Does my job allow me to spend much time daily on trading? Do I want to see quick gains, or am I patient enough to see my trades lasting longer? Do I want to make 1 or 15 trades a day? Am I disciplined enough to cope with a fast-moving market, trading on lower time frames? How do I feel when I see the price going against me for a day or two? Is my daily schedule quite busy, or do I have plenty of free time? Am I good with technical analysis, or I feel better with predicting the price movements based on company data and news releases? Once you've answered these questions, you'll have a bit more knowledge to decide on what kind of trading style you'd like to go with. If you're okay with watching the stocks all day, perhaps you could do better as a day or momentum trader. On the other hand, if all you have is half an hour a day to look at the charts, perhaps it would be better for you to go the swing trading or position trading route. Heck, you can even combine 1 or 2 of them and go with the flow. Remember, choose the style you are feeling most comfortable with and stick to it. One of the biggest mistakes I see traders do is that they change their trading style or strategy way too often. And this can lead to great losses, as once you're done testing all of the strategies, thinking that the previous one didn't work and the next one is the next best thing, your money runs out. So choose your style, choose your strategy and stick to it. If you liked this video and got any value from it, please hit that like button. It's right there below the video. Write a comment and come visit us on Telegram, for which you'll find the link below. We have a great group of like-minded people there. We are discussing our strategies and our trades, supporting each other in the process. So come in and say hi. Have a great week, even better trades, and I'll see you in the next video. Take care.